Yes, sir. It's your boy JM, also known as the Diamond Hands Prodigy, bringing you another weekly update to our Road to 100K challenge. Now, where do we start? This past week has been enormously volatile. You have no idea. There were so many whipsaws. As a matter of fact, today we have another whipsaw, but now to the bull side. So is this just a relief rally, or are we about to see SPY transcend into all-time highs yet again? Well, there's a lot to talk about first. People want to know, namely, one thing: why in the heck did the stock market drop the way that it did? There was so much doom and gloom on Twitter. It was incredible. I've never seen something like this before. It was full-blown capitulation. People went ahead and sold their entire portfolios because they thought that this was just the beginning. Now, it may or may not be, and that's namely due to the fact that Daddy Powell, aka the chairman of the Feds, Jerome Powell, came out with a press release just last week. And on that press release, it was about 2 hours of bombarding him with questions about the future of the economy and how the Feds are planning to grapple with this persistent issue we all know of called inflation. So long story short, the market was spooked a little bit because we don't know how many interest rates are in store for us this year. We think, or at least the market has already priced in 4 rate hikes this year in 2022. And each rate hike, we believe, is going to be for a 0.25%, so 0.25. Now, as I explained in my Stocks Explained video, the higher interest rates go, typically at the beginning, stocks tend to trend downwards. And that's because these growth stocks get battered, because as money's getting harder to borrow, that's going to affect the future potential profits of said company later on in the future. So that's mainly the reason why the stock market was just plummeting. A lot of people are afraid of these rate hikes because there's a lot of people who jumped into the stock market right in the middle of this massive bull run that started at the very beginning of the COVID pandemic. Now, obviously, stocks tanked because there was so much uncertainty, but as the government stepped in to alleviate the economy, they injected trillions and trillions of dollars into the economy and essentially propped up the stock market. Now, whether you think that's a good thing or a bad thing, this is not a political channel. What we're looking at right now is we're going to go over to our Robinhood portfolio and we're going to see what the damage is since last week. So let's go ahead. Okay, so as you can see, here is our portfolio. Right now, we are only down about $2,150 from our initial 10K. And that's okay, because as we'll learn on this channel, there's going to be plenty of downtrends and uptrends. What we're looking at is the long term. We're not concerned about these volatile swings up and down. We're in this market for 3, 4, 5+ years. So we're going to give our money ample time for it to accumulate and get to $100,000 eventually, or at least that's the goal. So if we look at our weekly chart though, oh my goodness, you can see, I mean, looking at the monthly, we did start with our initial 10K, and ever since then, the whole market has been selling off, but today we have a big bounce. I don't have many updates for you guys today. The only thing that I will tell you guys is that my snowflake position was rolled down because the market was just tanking so much. It was useless to have a $310 strike snowflake call when it was $80, $90 out of the money at the time. So I went ahead and rolled it down to collect the credit. So I received money to roll it down. And now we have transformed it into this $260 call that expires on the same expiration date. So it was a vertical roll down. Right now, our paper profits were down a little bit, but honestly, whenever you sell contracts, you don't really want to look at this total return because this is just your P&L on paper, right? Once we get closer to expiration, we're just going to roll this sucker out or let it expire worthless if Snowflake does drop considerably from today. And so that's the thing. I'm not sure. Nobody knows. Obviously, I can't predict the market. I'm just some guy on the internet. So as I always say, my channel is not meant to be taken as investment advice. This channel is purely for entertainment. However, if I were to guess, let's go and look at the chart for SPY. Okay, so here's SPY. Now, obviously, we filled in some gaps right here, so we can go ahead and remove these drawings right here. And it looks like I duplicated it. Remove and remove because we have filled those gaps. Now, also, this trend line was broken, so we're going to go ahead and remove this drawing as well. So this is what we're looking at right now. As you can see, it broke from the channel on about the 18th of January, and since then we have seen a lot of bearish momentum. However, is SPY setting to go right back up, and we're going to hit that resistance. So if I had to guess, I would think that SPY is most likely going to come up here to this trend line within the next few days, and it may or may not break through resistance. So this will be a very crucial point that will give us an indication on where we anticipate the market to go. So for right now, we're going to keep everything as it is. This is a waiting game. This may or may not be a dead cat bounce, and a dead cat bounce is just exactly what it sounds like. You ever had a dead cat in your hands and you just bounced it on some cement and had it bounce right back up? Because same, me neither. But you can imagine that premise. So that dead cat bounce, we don't know if this is just going to bounce up slightly and then have short sellers and the bears come in and just completely demolish it right back to the downside. So what we may see here is a lower high, lower low situation, but we can't just assume. We need to look at the chart and allow the buyers and the sellers to do their thing. And we're going to figure out very soon if sellers are going to be in control or if we can anticipate all-time highs within the near future. Now, there is one thing I am going to do here. I'm going to roll down the AMC put. So with the idea with this put that I sold is that we want by the 11th of February for AMC to be above $21. We also have $2,100 of collateral locked up because that's how you sell puts. Now, selling naked puts is completely different. You would need a lot less initial requirement. However, we're not selling anything naked. All of our puts that we're going to sell and all of our calls that we're going to sell in the future are all going to be covered. However, because this put is so deep in the money, we want to at least give ourselves a bit of an edge. So this has about 2 weeks to do its thing. It is about $5 out of the money right now. So let's roll it down. We're going to have to pay a debit in order to roll it down, but we're going to roll it down to the $20 put, which makes it more likely for it to expire out of the money by next Friday. And we will also receive $100 back in collateral, which I'm more or less going to use to pay for the debit here. You'll see what I mean. All right, guys, so remember, we have to change our options change here to a put. And so we sold the February 11th $21 strike put. So as you can see, it says -1 right there. So essentially for a rollout, what we're going to do is we're going to buy back this position. We're going to buy back the $21 strike at a loss. And that is because our position went the opposite direction than what we wanted. We wanted AMC to be above $21. Right now it's hovering about 16. So we're going to bring it back down to $20 in hopes that that would give the position a better likelihood for it to cross that $20 boundary and expire out of the money. So make sure we're on buy, put. We're going to go right here and put buy, and we're going to do a vertical rollout, meaning we're going to keep the expiration exactly the same. But now we're going to sell the put at the $20 strike. So now here, if we look at our order summary, we are buying back the $21 put for $525, and we're simultaneously selling a safer put, at least from our perspective, a $20 put for $425. That's what we're going to receive up front. The difference right now is $1 in premiums terms, or for you options heads, that's $100. And that so happens to coincide with the options collateral that will be released from us. And once again, the reason we're getting $100 back is because every time you sell a put, whatever that strike is, you have to multiply it by 100 and have that much money set aside in the event that you are wrong and you are assigned your position at expiration. So we're going to go ahead and call for one contract. So we're going to roll out just one, and our mid price is right there at about $1. We're going to try to save a little bit of money here. We're going to try $90 and see if there's anyone out there who is willing to complete this order with me and meet me right there in the middle. So as you can see, we're going to have $100 of collateral released. So if this order summary goes through, we'll have $10 left over from this trade, and we're more at an advantageous position, at least for AMC. So let's go ahead and submit, and we're going to see if this is going to fill. So a quick word of recommendation for you Robinhood users. So sometimes once you place an order, Robinhood's matching system is completely different from other brokers such as Charles Schwab. My main portfolio is on Charles Schwab, and I much prefer the way that they fill their orders. For me, it just seems like you just get a match and you get filled much more often on Charles Schwab than you do on Robinhood. So what we're going to do is we're going to replace the orders. So no one wanted to execute this trade at $90. So remember, that's going to be our net debit that we have to pay. So now let's try $95. We're going to review the order, and if this goes through, we'll have a difference of $5, which would be nice. So we're waiting. It's not filling, and it's not filling. So once again, we have to go and replace the order. And okay, F it. We might as well have to go at the mid price, which it fluctuates because the stock price is going up or down as we're doing this. So now the mid price is $103. So if this goes through, we're paying a net debit of essentially $3. There you go. So now it filled. So now if we go back to our portfolio and if we look at our AMC position, it is now the $20 put. So now all we need is for AMC to be at or above $20 by next Friday on February 11th, and we'll be in the clear. We will have our $2,000 released back to us, and we'll be able to do it again. I'm not too sure if I want to get assigned because there are instances where you might want to get assigned. One of those reasons might be you might be playing the wheel strategy. The wheel strategy is when you sell a put, you get assigned, so you buy those 100 shares at your strike, and then right after that, what you're going to do is you're going to sell covered calls, which is what we're doing on Snowflake, but in Snowflake's case, we're running a diagonal call spread, which is sometimes called the poor man's covered call. If I decide to get assigned, I'll make that decision throughout the next, 10 business days or so. For right now, we're going to leave everything as is. And guys, this has been week 3, week 4. I wasn't able to make the update last week because I'm getting ready for a big surgery coming up pretty soon. So I don't know if after the surgery, if I'm going to be out for a week, for 2, for 3, who knows? But at least for now, guys, we did have a nice relief rally. This is what we needed because last week on Friday, our portfolio dipped to about $6,800, losing almost 50% of our initial principal. It can be a little scary, but hold on until the long run. We're in it for the long run. And just know that statistically, the longer you're in the stock market, the more likely you are to make money. Can't remember who said this. I want to say it was Warren Buffett, but it's not about timing the market. It's about the time in the market. And with that being said, guys, I hope you guys are crushing this market. Hopefully my channel is helping you guys make money in whatever kind of market, whether we're in a bull market, in a bear market, or if our market is just trading sideways. Once again, I'm going to try to release the call option explained video before my surgery, but in the event that I can't, I don't know when I'll be able to catch you guys again, but I hope it's real soon. Happy investing, guys, and I'll catch you later.